All right. Has it started now? Yeah. Oh, yeah. All right. So hello, everybody. Welcome to another free webinar. Let me see. Am I already sharing my screen? I'm not quite sure. Yeah. Isn't it? Yeah. Okay. I'm just waiting for people to join in. I'm not quite sure whether anyone is here. Let me already show to you today's program. I am going to talk about candlestick patterns. And I actually made a whole YouTube video, which was about, part one, candlestick patterns, how to read candlesticks. And I'm not quite sure whether many people are joining today's webinar because they may be thinking candlestick patterns, this is such a simple topic. Whereas I do have to tell you that this is not a basic course today. This is not for beginners. So let me see who is already here. Nobody. All right. I can't see anyone. Is that comment section? All right. Anyway, as I said, today's topic is all about candlestick patterns and how to read candlestick patterns. And I can actually imagine that not a lot of people will join today's class because they may be thinking candlestick patterns, this is so simple. Whereas I do have to tell you, today's topic is not, a basic course. You already need to know a lot in order to understand what I'm talking about, all right? So this is some sort, and today's program is a part 2 because I already had a part 1. I uploaded the video to my own YouTube channel, but you know what? I'm going to revise what I actually talked about on my YouTube video to make sure that we're all on the same page. But I just have to make sure that people are watching this or people are joining in. I just can't see anyone. All right, let me start. Now, first of all, I do have a question for today's program. I do want to clarify this situation, first of all, where it says number 1, right? The underlined candlestick patterns A and candlestick pattern B. I want everyone to type in what you can actually see here. What can you see here? What is this? A and B. All right. Nobody. Anyway, all right, so I just continue with my lesson. What you can see here, right, is a hammer, obviously, in A, and the same candlestick pattern occurs a bit later. And today's program is about, I want to make sure that people, go away from just focusing on memorizing a particular candlestick's name, right? And rather focusing on the psychology and logic of candlestick patterns. Because, candlestick patterns are the very fundament. They're like the alphabet of technical analysis. It doesn't make sense to use, tons of indicators in order to predict price direction. It doesn't work like this. I see too many times, I see traders just opening a chart and saying, this chart looks bearish to me, this chart looks bullish to me. This is actually judging. This has not much to do with technical analysis. What you have to do, and memorizing candlestick patterns has also not much to do with technical analysis. Candlestick patterns are, as I said, like the alphabet. That means it's very important to understand the very idea behind these candlestick patterns. So let me see if anyone has joined in to answer the question that I have just asked. Oh, hi. Hello, Lorenzo. I actually asked a question. I want people to answer what you can actually see in A and B. I already said something, but I actually want the participants to tell me what they can see here, right? A and B. Gosh, all right. Okay, now here in A, we have the scenario that after a downtrend, right, you have something like a hammer, right, a hammer. Now, later on, you have again the same candlestick pattern. Now, what's the difference? The difference is the context, isn't it, right? This is a candlestick pattern. The hammer is a reversal candlestick pattern, and it is usually reliable when it occurs at the right location. If it occurs, like in scenario B, if it occurs at the wrong location, it is no longer reliable. So context matters a lot, right? And another thing is the same candlestick pattern occurring at an uptrend, at the end of an uptrend, means something else rather than, when it occurs in the middle of an uptrend. These are very important aspects that I do want to answer and cover in today's class. So let me go back to the PowerPoint presentation. Oh, all right, now I can see people writing. One is a reversal pattern and the other one is a continuation pattern. Yeah, that's right. This is true. That means it depends on the context, right? Depending on the context, you either have a reversal pattern or you have a continuation pattern. But the thing is also that it depends on so many more aspects. And the better you can actually read candlestick patterns, the better you can predict price direction. This is all what I have mentioned in part 1. This is on my own YouTube channel, but never mind, I do want to revise what I have mentioned on my own YouTube channel in order to make sure that we are all on the same page. Now, let me ask you another question. Ignore what you can see here. Just focus on the ones that I have encircled. Now, this is a chart, right? This is GBP USD. And another thing, I trade GBP USD, Euro USD. Because what I would say, this is my recommendation to anyone out there, focus on 2 or 3 Forex pairs. I know this will lead to the fact that sometimes you can't just trade at all because there are no opportunities whatsoever. On the other hand, you need to understand your Forex pair because sometimes, you need to take into consideration an aspect that most traders just don't mention, which is the behavior, right? You need to understand the logic of your Forex pair. This is what my recommendation is. But anyway, now, this is GBP USD, right? 2020, right? 2020, and this is GBP USD 2021. This is the monthly chart. Now, my question to you is, can you explain what has happened here and what has happened here? We have in both scenarios, we have a bearish engulfing pattern. Why do I get here a different price direction compared to this one? Why do I get here a different reaction? Can anyone tell? Let me read the comment. Oh gosh, but I'm actually used to this because I'm a lecturer, and even when I ask questions in a classroom, sometimes people just don't participate at all. But what do you think? What's the difference? We have in both scenarios, we have an engulfing pattern, right? Both occur on the same time frame. It's the monthly level, but afterwards, right, different price directions get triggered. Why? That's a question. Why? I'm here listening. Failed bearish, oh, wait a moment. Failed bearish reversal pattern in the first one. Okay. reminds me of my students. Okay, anyway, now the thing is that in both scenarios, right, we have a bearish engulfing pattern in both situations. Now, situation number one, the bearish engulfing situation number one, this happened. The question is always, ask yourself, in order to understand the logic and psychology of a candlestick pattern, always ask yourself one question: where exactly did it occur? What's the exact location of this particular candlestick pattern? Now here, this one, as you can see, this happened after a rapid sell-off, right? This was a rapid sell-off, and then price went up, and then you had this bearish engulfing, a bearish engulfing pattern after market participants decided to move up, right? After the decision has been taken, after this order has been broken, after participants decided to move up, there you have a bearish engulfing pattern right after the decision, right? So that means right after the breakout happened, price moves back to the previous level. So that means this one is at the beginning. This is a bearish engulfing pattern at the very beginning of a newly initiated uptrend, all right? And this one here is a bearish engulfing pattern, well, where? In the middle of a ranging market. In the middle of a ranging market. It's not at the beginning, it's in the middle. And the funny thing is, or the interesting thing is, now look, we moved up, right? And then down, up and then down. So, and I told you several weeks ago when I talked about how to trade range-bound markets, I told you that after 2 or 3 times of touching a well-respected support or resistance zone, well, there you will have some sort of an exhaustion. That means you can't trade the idea of buying at a well-respected support zone and selling at a well-respected resistance zone again and again, right? People will show some sort of exhaustion, but that's another thing. So here we have 2 different scenarios. Here, a bearish engulfing pattern in the middle of a ranging market, right? And here, a bearish engulfing pattern at the beginning of a newly initiated uptrend. So these are completely different things, right? The same pattern, but different scenarios, and that's the reason why price takes a different direction. And that's the reason why it's not enough to only focus on memorizing the names of candlestick patterns. This will lead basically nowhere, right? So what I'm trying to say is always clarify the overall market situation, right? The market structure. That means open up the monthly chart and ask yourself, are we stuck in a ranging market? Is this an uptrend? Is it a downtrend? What is it, right? And then know that double, triple, or even more candlestick patterns are always more reliable than single ones, right? And that's the reason why people always say, you know, focus on price patterns, because price patterns, the difference between candlestick patterns and price patterns is price patterns are usually formed by more than 3 candlesticks, right? So that means they are very reliable. And another thing is, the higher the time frame, the more reliable a candlestick pattern is. That means first of all, you know, open the chart and have a closer look at the monthly chart. Try to understand the monthly logic. Those candlestick patterns, they don't appear randomly. And the other day, sometimes said to me, well, come on, why do you always come up with GBP USD? This is a range-bound market. Well, did you know that in 80% of the time that markets end up ranging? This is a normal thing. Markets use, in 80% of the case, or in 80% of the time, markets move sideways. That's a normal thing. So you need to understand how to trade range-bound markets. Now, that means open first the monthly chart and read the candlestick patterns here. That means this one, this candlestick right here, right, that already tells you that the logic of the next month is that probably people, right, market participants, they want to test the low of the month once again, because they want to see, right, is this a solid fundament, right? Is this a solid fundament? Can we now move up, right? They want to see whether this was the end of a movement that was, you know, moving down to the support zone. That means there is going to be a sort of testing. And then, but that's not the only idea of this month. This month, the previous month also tells you there will be some sort of testing, but there will be also some sort of testing to the, you know, to the upper side. So this is a very important idea. So that means you first of all clarify the overall logic. And what you also clarify is we are, since January, right, we are basically stuck in a range-bound market. So that means if I were you, when I do my technical analysis, I take a note and I write, there could be some sort of exhaustion now, because, you know, we've been now in this situation for 8 months. Yeah. Okay. So you take notes, etc., and then we move on to the next one, which is, as I said, you first of all focus on the higher time frame, on the monthly chart, to understand the logic, and then you move on to the weekly and daily, etc. And don't take a trade only based on a candlestick pattern. But I think you do understand that this is not the purpose of today's lesson. I'm not trying to tell you just focus on candlestick patterns. What I'm trying to tell you is just don't use tons of indicators, right? Use 2 indicators maximum, the ones that work for you and for your strategy, and then focus on the alphabet, the fundament of technical analysis. And the fundament is still candlestick patterns, and they work very well. They work brilliantly. And candlestick patterns are very helpful. They tell you when to enter, right, or when not to take a trade. That's also very important. And it's also something that I'm going to show you in a second. First of all, let me see if there are any questions. Let me see. Okay, now look, candlestick patterns. And I had a brilliant trade. I'm not going to tell. Oh, yeah, I had a brilliant trade on Monday, but that's not, you know, that's not important. I can't stand it when people, you know, are trying to show off their trades. I mean, we are all learning. It's not about copying someone's trade, and it's not about using, as I said, tons of indicators. And it's not about. That's another thing. What, you know, my opinion. I believe that A1 trading, right, and Nick as a trader, I think these are reliable sources in order for you to, you know, deepen your understanding of technical analysis. There are loads of traders who are just trying to sell, you know, their services or whatever. So be careful with that as well. Now, what I want to do is I want to show you another example where you can see that candlestick patterns tell you either to trade or not to trade. You exactly know when to trade and when not to trade. Now, let me show you this. And by the way, the handout of today, right, is uploaded to Google Drive. I placed the link to Google Drive, to my Google Drive, in the chat here, as you can see. Yeah, you just have to scroll up, and then you can click on the link and you can get the handout of today's lesson. All right, so let me show you another example. This is still GBP USD, the hourly chart. Let's go to, sorry, wait a moment. Let's go to Monday. Yeah, to Monday. All right. Yeah, this is the Monday chart here. It starts 23. Just a second, sorry. Exactly, this is where it starts, all right? Now, this is the chart that we had on Monday. On Monday, there was a steep movement to the upside, which was perfectly expected. If you didn't take this trade, that's a pity, because there were multiple reasons. Now, first of all, as I said, we're not only focusing on candlestick patterns, isn't it? But first of all, there was a psychological level, a psychological support zone nearby, you know, the 36 as a psychological level. So you already knew. You didn't know. I mean, the psychological level doesn't tell you that this was it with the testing stage, right, going to the support zone. But what you can know is that there will be some sort of price retracement. There is going to be some sort of rejection. I mean, imagine a psychological level, and we are stuck in a range-bound market. So it doesn't make sense to expect the price to move down or to expect a fast sell-off. You understand? So everyone was expecting some sort of a rejection. Plus, we talked about the monthly logic. I told you, didn't I, right? There is a directional move which happened, and the previous month told us, with a long shadow, it told us that we're not only expecting a price movement to the support zone. So we are all expecting some sort of rejection, plus there was a double bottom on the daily level. All right. So now with this information, we see on Monday that on Monday the market opens like this, with a thick, convincing candlestick pattern, right? With a thick, convincing candlestick pattern. One thing. And then we see a sideways movement, right? And then what happens? We get two doji patterns. They can be actually ignored, because two doji patterns in a sideways movement doesn't mean much. Usually doji patterns are very effective in trending markets and not in ranging markets. And the situation at the moment is we're stuck in a ranging market. That means doji patterns are not very reliable. They're very, as I said, they're usually very reliable in an uptrend or in a downtrend. And usually what they mean in a ranging market, after you had this sideways movement, they just means these are just brilliant opportunities for you to enter. Yeah, so you could have entered even after this doji right here or after this one, because it was, the market was just about to open. I mean, the London trading session, right? And that's another hint. When I ask myself whether I'm going to trade the London trading session, I first of all read what has happened before. As I told you, candlestick patterns are like the alphabet. That means they are communicating an idea and a logic to you. And they usually tell you, and this is also a trick, I don't know why nobody else uses it, but usually the way a day has started is actually a brilliant signal to understand what's going to happen later on. That means before the London trading session, I read the previous candlesticks in order to understand, is this a reliable day or is it not? Is this a strong day or is it not? That means this was the London trading, this is when the London trading session opened, and I saw, oh wow, we have a convincing candlestick pattern plus a sideways movement, right? A sideways movement usually means, you know, there is a certain strength, right? There is people seem to be quite convinced, and then basically two doji patterns, and then you can enter, and then you get a doji in the middle of nowhere. This is a brilliant one to read, to understand that sometimes candlestick patterns can try to trick you, right? When you have false candlestick patterns. And this is what happened here. In the middle of nowhere at 2 p.m., right? Before the New York trading session, you have a doji in the middle of nowhere. This doesn't mean anything. This just means you can buy again, right? This is it. because this has no meaning whatsoever because it happened in the middle of a strong uptrend. And then we had a steep movement to the upside. And then the next day, I already knew before I went to bed, right? I checked the price. I wasn't sure. I first of all didn't want to close. And then I said, oh, well, this was a steep movement to the upside. Plus, I was just expecting for a price rejection. I am not expecting for, you know, for a breakout or anything like that. So I closed the position, and the next day I saw this, when the London trading session was about to open, I asked again, you know, I usually check, am I going to trade with the London trading session or with the New York trading session? So I have to read the previous candlestick. When I saw these previous candlesticks, I just closed the chart and I didn't take a trade at all, because you have smaller bodies. You not only have small bodies usually mean, you know, market has slowed down. When market slows down, it gets really tricky, because then you get false signals. And then piercing patterns or, you know, engulfing patterns are no longer reliable patterns. There is no idea. This situation, these candlesticks, they tell me one thing. They tell me people seem to be exhausted. I mean, imagine, think a bit logically, use your brain. Don't use indicators. Don't use tons of indicators. Don't copy anyone. Just read what you have in front of you. It's very simple. You just have to read what it says here. I mean, look at these candlesticks. They are indecisive and they're exhausted. Why? Because the day before, there was a steep movement to the upside. Obviously, anyone would be exhausted after that. Right? Sorry. Let me see whether there are comments and if you can follow my idea. I think I have a bit of a different trading strategy. We don't have the link on YouTube. The chat doesn't allow us to view messages before we join stream. I don't understand. You mean the link to the handout? Wick on the bottom. All right. Okay, sorry. First of all, does anyone have a question so far? Am I too fast? I think my trading strategy is a bit different, because when I listen to other traders, I usually can't necessarily relate that much. I am more focused on candlestick patterns and on reading candlestick patterns, you know, in detail. All right, I see. The link. I'll send it. I will place it. I'll just send it later on to you. All right. Here it is. Okay, brilliant. I think it's very important to read candlesticks in detail and not just opening a chart and saying this looks bearish, this looks bullish. We're not judging, we're reading, and think logically. I mean, after you had such a movement to the upside, it's obviously there is obviously going to be some sort of exhaustion, right? And then, as I said, even engulfing pattern or a piercing pattern, which are usually very reliable patterns, are no longer reliable. And the previous candlestick patterns are always a signal for you to understand how the day is going to, you know, unfold. That means these are usually telling you whether this is going to be a reliable day or a less reliable day. And I already understood when I saw this that, for example, an engulfing pattern or a piercing pattern, they completely get ignored, right? I mean, after a piercing pattern, no reaction. After an engulfing pattern, not a proper reaction. So I knew that today I can't necessarily rely on candlestick patterns. This is how it works. The previous candlestick patterns tell you how the day is going to be. It is actually not difficult. Yeah. Let me continue with another example. No, this is it. Yeah. All right. So important principles of candlestick patterns. Now, as I said, the same candlestick pattern at a different location has a different meaning. right? For example, an engulfing pattern in a sideways movement after a day where you had a steep movement to the upside doesn't mean the same like an engulfing pattern, at the beginning of an uptrend, for example. They have a completely different meaning. So that means be always aware of the location. That's one thing. And another thing is that some candlestick patterns, and I'm going to make a video on this topic. I'm not going to cover it today. Some candlestick patterns require your focus on the shadows, on the wicks, and some others. In some other cases, you have to focus on the size of the body, right? Like an engulfing pattern. An engulfing pattern is more convincing the bigger the body, right? A hammer is more convincing the longer the shadow, etc. A doji, for example, right? A doji, the color doesn't necessarily matter. A doji, imagine a doji is something like a question mark, because people are indecisive. A question mark, they mean they ask a question. They talk to you, they ask a question. They ask the question, should we test the support zone once again? And the answer is a dragonfly, right? You don't need to know the names, but anyway, this is a long-legged doji, this is a dragonfly, and the dragonfly tells you no. We don't have to test the support zone once again. So you could have bought right here, and you could have bought right here and right here after this one, because this one occurs randomly in order to distract people, right? In order to kick some people out of their trades, because one may think, oh, wow, well, let's close the trade because it's, there is some sort of indecisiveness again. No, there is no such thing, because it appears randomly in the middle of an uptrend. Oh, yeah, that's nothing. Yeah. All right. So that means always be aware that you have to, when you see a candlestick patterns, just ask, do I trust this pattern? What are my reasons? When I first started trading, I used to write down 3 reasons why I would now take the trade. And usually I would write down, 3 reasons why not to take the trade. And then when I see, oh, I can't necessarily find reasons against, so that would convince me to take the trade. You don't have to do that, but collecting a couple of reasons why to take a particular trade makes usually sense. Because if you have no reasons other than a candlestick pattern, you should actually not take a trade. And then I keep talking about the context, which is a very important topic. Now, let me show you something. Yeah, exactly. I want to ask you now. I want to ask you a couple of questions. All right, in order to cover this this topic right here. Wait a moment. I have to find it. I did market today, and then just let me see. Here. That's perfect. That's brilliant because it's here. I do want to ask you a question. Whoops. Well, all right. Okay. Now, you can all see this chart, right? Now, what I want to ask you is, okay, now we have 3 bearish candlesticks in a row, right? 3 black crowns, that would be the name. But as I said, the name is so irrelevant, you can't imagine. It's more about try to focus on the logic and on the overall idea. Okay, so we have 3 bearish candlesticks, right? And this is when the market opened. And my question to you is, and here we have something like a gravestone doji. Now, my question to you is, let me see. This goes on, yeah, exactly. And one moment. Here. Okay, here has. Okay, here has the market opened and here has the market closed, right? The market has closed here and here the market has opened. Now, my question to you is, when you see these candlesticks, right, the ones that I have highlighted, where do the candlestick patterns occur? What is their exact location? And what do they actually mean? What do they express? And how reliable are they? You can just type in if you want to. Oops. What do they express? You see, now the market opens right here. It opens with 3 black crowns. It opens with 3 bearish candlesticks. That means already what? That means it is at the very beginning of it is at the very beginning when the market opens, isn't it? All right. Okay, so it is at the very beginning when the market opens. Now, what I'm trying to say is, when I see something like this, you know, 3 black crowns or 3 white soldiers, that means 3 green candlesticks, right? Like here, 3 white soldiers. They are usually continuation patterns. These are usually continuation patterns. But the thing is, they need to be at the beginning or, yeah, well, in the middle of a trend, right? To tell you whether or how strong a certain decision is, you know. If I have something like this at the very beginning, when the market opens, I already know that today the market seems to be quite bearish, right? That means I let the market, first of all, take a certain directional move to a certain, you know, support zone. And then I wait for a reversal pattern. But this just doesn't happen, right? It just goes down. And then at around, you know, very late in the evening, we get something like an engulfing pattern, but that's no longer reliable. Yeah. And then here we have a gravestone doji. A gravestone doji, this one is what? A gravestone doji. What does that say? This is now a very important aspect. Wait a moment. To what does that question refer? You mean continuation? Can you explain your question, please? You mean continue? I don't know to what that actually repeated bias. Bearish sentiment. Yeah, continuation in the sense of, you know, if the market or if the current trend is a downtrend, then a continuation in that direction, or the opposite. It's already on. Okay. All right. Yeah. Okay. Now look, this is a false signal. This is not a signal at all. This is a false signal. This is a gravestone doji. But what did I say? A gravestone doji is usually just effective if it occurs at the end of an uptrend. And once again, I'm going to make a video on this, not on the names, right? Forget about the names. No one cares about the names. But you need to know roughly what it means when you see a particular pattern. You need to know more or less what that now means, what type of price direction can be triggered. You understand? The location is the key. Everyone talks about the bloody names, but it's more about, you know, understanding where it appears, because the location will tell you what's going to happen later. And a gravestone doji at the end of a downtrend doesn't mean anything. It doesn't mean anything, right? It just means, I don't know, nothing, right? So rather, when you have an uptrend and then a gravestone doji and then a confirmation, then this would be an opportunity to sell, right? And so this is a very good example for you to understand that the context is actually key. Context is key, all right? Please write this down somewhere. You know, context. You have to bear in mind the context. And here I have written down a couple of reversal patterns. These are usually considered to be reversal, but again, it depends on where they occur. Yeah. Exactly. I wanted to show you something else, but now I can't. Beginning or end. Yeah, all right, and for sure, right? And then use a confirmation that goes together with your overall strategy. That means moving average or support resistance, trend line, RSI, Fibonacci, MACD, etc. But not all of them, right? Just I'd use, for example, one. I usually use moving average and support resistance to understand whether this is now, whether my candlestick pattern got confirmed. It's not true. People sometimes say, you know, wait for another candlestick pattern to confirm what has happened before. No, sir, it doesn't work. Sometimes it's just too late for that. Some candlestick, that's true, they do require for another candlestick to confirm what has happened. But some others, you know, sometimes it's just enough when you have a moving average plus support resistance zone plus the overall logic of the month confirming what has happened on the hourly level for you to enter. Because if you wait too long, I mean, yeah, but yeah. Now let me show you something else. Yeah, let me show you something else. You know what? We can actually apply what I just said to today's chart. I didn't prepare this, but I think this will be a good opportunity for you to see what that actually means. Now, once again, I'm going to repeat how I analyzed today's chart. What I did is I basically, let me remove this. Yeah. All right. Now, what I did is I had a close this week. I was very focused on the monthly chart, and this has something to do with, I mean, it's the last week of the month, isn't it? Right? It's the last week of the month. Well, yeah, not exactly, but almost the last week of this month. That means I focused on the monthly idea, and I knew that, you know, the previous month told us something. It told us that the support zone got violated, right, on the one hand. On the other hand, this is not an indicator. I mean, we are stuck in a range-bound market. That means we had a directional move, right? We already had a directional move the previous month. That means this month I am looking for buying opportunities. That means the whole month, I didn't do anything else than waiting for buying opportunities. That means I didn't sell anything. I knew selling would be very dangerous because I don't know whether that's going to work, because the previous candlestick tells me that there was a directional move and buyers are trying to push the price a bit up. And what has happened so far this month? Not much. It just moved, you know, there was again a testing to the support zone, but there was no testing whatsoever to the resistance zone. That means nearby, you know, when we go down to the support zone or when we go down to this low of the previous month, there could be a good opportunity for you to enter. Yeah. Okay, so this is what I did. So I focused once again. I always, first of all, have a closer look at the monthly chart, and then I had a closer look at the weekly chart, right? This is the weekly chart. And here, the problem is we have quite a convincing candlestick pattern, right, moving to the support zone. But this candlestick pattern can also mean something else. It is, on the one hand, it is quite convincing. On the other hand, we know we are stuck in a range-bound market. So this could also mean this was just, you know, a fast sell-off. A fast sell-off just means people were panicking. You know, imagine the psychological situation. People were panicking. On the other hand, this means that people are not, that means that next week, that means the current week, we're stuck in this week, right? This is the previous week. That means we are not only expecting people to buy, yeah, but we are, I mean, that's the reason why I had actually closed my trade. I had bought at 1.36406, but then I closed my position because, well, I was not quite sure whether this week is going to end up, you know, or to turn into an engulfing pattern. How likely is this? That means always use your brain and ask yourself, how can the next candlestick pattern on the weekly level look like? What do you expect? Do you expect this to turn, you know, after this candlestick pattern, right? If we hide this one, after this candlestick pattern, what do you expect? Do you expect another red candlestick? Whoops. This is not what I wanted to do. Oh no. Guys, I'm very sorry. Here. Anyway, so that means always ask yourself, what do you expect, right? What do you want the market, or what do you expect? What is likely to happen? Is it likely that after a red candlestick, after such a convincing red candlestick, that market goes, you know, or that market goes into this direction? It is not likely, because as I said, it's not a trending market. It is very likely. This movement, this was the easiest week ever, because it was very likely that here nearby you would expect people to basically buy, right, and price move up. So that means this is the week. And then the daily, what was not very satisfying was this candlestick, what happened yesterday, right? Because there seems to be some sort of a resistance zone now. Okay, so that means today's lesson, or today when I opened, I didn't take a trade today. But if you have a closer look how the market, and the reason for this is because of the candlestick, because of the opening. I didn't like the opening. It opened like this with a convincing candlestick, right, with a convincing bearish candlestick, and then the trend changed, right, to the upside, and then you had again an engulfing pattern, but which didn't get respected. This didn't get respected, this one didn't get respected. Both got just ignored. So I wasn't quite sure, you know, how to trade this, because if you ignore usually, you know, reliable candlestick patterns, what does that mean? What does that express? I don't know. Yeah. Let me move on. Exactly, as I said, don't just rely. Today's lesson was about focusing on the idea, the logic and psychology of candlestick patterns. And as I said, once again, focus on, first of all, clarify the overall situation, the monthly situation, and always ask yourself, see the candlestick patterns like the alphabet. Their candlestick patterns are actually talking to you, right? They're expressing a certain idea. And they're expressing a certain idea, they're communicating an idea. And ask yourself, what is now likely to happen? And then don't just, you know, jump on every single candlestick pattern you see. Ask, is this now a false one? Is this a false signal? And this has, in most cases, a false signal happens because of the location, right? A candlestick pattern occurring at the wrong location. As I said, a gravestone occurring at, for example, at the end of a downtrend. Doesn't say anything, does it? Right? So a gravestone doji at the end of an uptrend would give you a reliable signal, for example. That means ask yourself, this candlestick in this location, does it make sense? Yes or no? And then don't take trades only based on candlestick patterns, as I said. Let me see if I have mentioned anything important in part 1, because that was my YouTube video. Let me see. Yeah, and the overall, yeah, no, that's not very important. This was just for you to understand, you know, candlestick patterns, they are reliable when you have like double or triple or even, you know, price patterns. And they either mean continuation in that direction that has been triggered, or they mean reversal. That's it. Trading is not difficult. Well, you have to apply this simple idea every day, and this makes it very difficult. And what is also very difficult is understanding that when you don't trade, this doesn't mean that you were not productive. Yeah, most people usually, you know, you will be successful one day when you are able to deal with the trading psychology. This is key. I tell you, nothing else matters. You can have your own strategy, it doesn't matter, right? Whatever your strategy is, it doesn't matter. At the end of the day, you will be successful if you are able to figure out where your problems are, right? Sometimes, you know, when we trade, we have these thoughts such as, but I really need money, or I just want to make a certain amount of money, or I'm here to work, I have to earn something today. These are your thoughts, and you have to work with those thoughts, because these thoughts are very distracting. And you know, rather than being focused on these thoughts, and this is my solution to you, right? It's not about, I'm not saying go to a therapist, but what I'm saying is, rather than focusing on your thoughts, focus on the chart. And that's going to help, right? Try to be really, get interested in trading, full interest, show your full attention to trading itself. And not trading doesn't mean you were not productive. Right? Waiting. As I said, this month, I only took 2 trades. And the rest of the time, I was just waiting. So that means it is very important to know how you can actually wait, right? What are you going to do when you are basically waiting? That's also a very important question that you need to answer, right, for yourself, whatever your interests are. I think the psychological aspect is where people, yeah, absolutely, absolutely, yeah. This is the key, yeah. Whatever your strategy is, and look, I have a linguistic background. I studied applied linguistics. I'm a lecturer here in Switzerland at the University of Zurich for Applied Sciences. I teach linguistics. I have no idea. When I was little, I would, you know, always struggle with numbers. I cannot count to 10. No, that's not right. But you understand, I have a problem with numbers. I hate numbers, but I love trading, because I think trading is just another language, isn't it? It is. That means this is now, and this is something that we do in neuro-linguistic programming. In linguistics, we have a tool. When we have people who struggle learning a particular language, there is actually a tool in neuro-linguistic programming, and this is all about take something you absolutely enjoy. In my case, it's learning languages. I speak 9 languages, and I love learning foreign languages. And take a certain language, take something that you really love, right? And now your task is to build a bridge between what you love and trading, basically. That means try to project the skills you already have in one field to the new field, which is called trading. And this is actually very easy. Just ask yourself, how does that particular passion feel, smell, look like, etc. Write it down. What's the color, etc. Yeah, what does it feel like? Why am I so passionate in one field, and why am I not that successful in trading? And then just basically transfer these skills to basically a new, you know, in a new field, which is trading. For me, trading is just a foreign language. These candlesticks, they communicate, they talk, right? They say something. In your situation, it may be something else. But I'm also going to do a video on that to help people fix the psychological aspect. Yeah. All right. So I think this is it for today. Thank you very much indeed for joining and for your comments, etc. And make sure to subscribe to A1 Trading. I absolutely love this channel because they offer free of charge webinars. This is just brilliant, isn't it? Oh, all right, yeah. Well, my opinion is, I'm not going to say much, but I don't think that anyone should necessarily trade with funded accounts. I know. I also started very small, but I was working, 10 jobs to make sure that I can, I can have my own money to trade. I know it's very hard, but I think it's much better because the problem with funded accounts is they have certain expectations, such as you have to. I'm not quite sure, right? I have no idea because in Switzerland it's not very. Most people don't have funded accounts. It's not typical here. I'm not quite sure if it's even legal here, but anyway. So, for example, you have to. What I know from someone else is he said to me that you need to take certain a number of trades within a certain period of time, etc. So that means I'm not quite sure if FTMO teaches you the right way of trading. I think it's rather then you end up doing things you would normally not do. As I said, I took 2 trades this month. I'm not quite sure whether I could have done that with FTMO. I have no idea, right? If it works for you, that's brilliant. I'm really happy. I'm here to help. As I said, I'm a lecturer. I love education. I love educating people. And it's all about education. If it works for other people, I'm really happy for them, yeah? But I really rather think, as I said, my own experience is just trade with your own money is what I believe, and it works for me. Okay, yeah. All right, so thank you very much indeed. I hope this was helpful for you, and I hope to see you again very soon. And take good care of yourself, and see you. Bye-bye, everyone.